Got 100K from a settlement and not sure what to do. I got into a really bad car accident and got 100K from it. I've just had it sitting in my savings, but don't know what to do with it. I went today to Chase Bank and talked to an investment banker, but wanted to get other options before I invest it. Any recommendations? Was told I should try to put a down payment on a house and just rent it out. But that sounds risky. Read this. Our personal finance wiki. Windfall. Now is a good time to learn personal finance. Give it to that dude on our Unethical Life Pro Tips who lost 100K of some bookie's money gambling and is going to end up in a ditch. Or fund your emergency fund. Max your retirement accounts. And invest in VTIVXUS and forget about it until you retire. How's your health after the accident? Sometimes damage can take a while to show up. Pay off your current debts, especially high interest. Set aside maybe $10,000 for toys or vacations or whatever you want to spend some money on. VTVQQQ the rest and let it marinate. Only thing I'll tell you is that the investment banker from any bank is first and foremost a salesman. They work for the bank, not you. Tons of banks and credit unions offering CDs around 5 for short periods anywhere from 3-6 months. Some offer higher percentage. Could throw some in there. It's a safe return, but you need to leave it in. I've been a little shy about the market lately. Threw about 100K into a CD and will enjoy an easy no-hassle return. Buy a Skyline R34. I did. Great investment. Well, right now you can make 4.5 risk-free sitting in a high-interest savings ACCT like Ali. I would do that until you decide where to invest it. Just making sure is the $100,000 after any medical liens your health insurance may have on you. Don't talk to Chase about investing. They will only put your money in a shitty low-interest account or CD. Chase is not where you go to get investment advice. I have Chase and I moved my $90,000 from them to Capital One for 4. Interest took less than 5 minutes. To create an online savings account and put in the transfer. Now I make $300 a month in interest off of it. Do this while you research other things. If you want to save it long term, then max out a Roth IRA. And invest the rest in a very low fee SP matching fund. IIRC Vanguard is offering 5 on cash. You could take it out at any time. Save it as you'll need it for future medical expenses, whether it's mentally or physically. You don't get $100,000 by accident. Money market funds are at least 5 now. Make some return until you do something more permanent. You could ladder some brokered CDs at various maturities to get a bit more return and guarantee it over a longer period. How old are you? How much money do you have? Do you have any debts? Etc. Without knowing any of that info, I'd say start your own investment account. Stay away from a banker or advisor. VT Sacks and chill. But your specific circumstances might need different options. You should keep 3 to 6 months of living expenses in a HYSA. That can be your emergency fund and you won't have any penalties if you have to dip into it. If you have any debts with interest rates below like 4, do not pay them off. Put that money into another HYSA and continue paying on them. If you have any debts with interest rates above 4-5, pay them off in one lump sum. Invest the rest of the money, as others have said, in index ETFs. Pay off any higher interest debt. Build an emergency savings. Then either invest the remainder into a good ETF or keep it set aside for a home purchase if that's what you want to do. I believe you're looking for WSB. Invest in SP 500 and forget about it for 10 years. 1. Take some of that and put it towards an emergency fund. 2. Invest a good chunk of it into some ETFs. 3. Spend some of the money on things you enjoy. If you are planning on investing it, which you likely are since the post, it is safest to invest in quality connection that offer a dividend. Buy one stock in a sector that returns a 1-2 per share. Invest in more than one sector. Make sure you plan not just buy something cause one person liked it. Earn money over the lifetime of a stock you want to purchase. Investable co that are either earnings in growth YY of R, have something other co in their sector want, or a co that is essential such as energy production, cellular transmission, materials MFG. Personally, I would dump into dissect. If you want a low-risk investment, there are plenty of high-yield savings with no fee. Set aside for future medical expenses after paying down debt. Big mistake people make is not think about the eventual future medical issues from a bad accident. Open up a Schwab brokerage account and invest $80,000 in dissect. Have fun with the other $20,000. If it's sitting in your savings, make sure it's Capital One high-yield savings. If you have at least $80K in there, they will give you additional $290 every month. I believe I have $8K in there and they give me $29 a month. You know, while it's sitting there, make it give you more good money rather than trash savings. Interest. Real estate is pretty risky since one house is not diversified, and you have to manage the leverage. And nothing says you need to invest all of it in stocks. Especially if you are in poor health right now. 100 stocks is very risky. And there's no guarantee the future will be as good for it as the past. You could allocate some or even most of the money to cash or bonds. If you were to do this, I would recommend matching duration to time horizon. Another option obviously is to get a good advisor if you can. Call a Neil agent and hope he can rotate it into 5-pay dividend-paying life insurance. Your money should be very liquid after 2 years, and can expect corporate bond-like returns 5 over your lifetime without having to pay taxes. Use it for emergencies and buy the dip before retirement, and to buffer against volatility during retirement. FYI, an investment banker is not you want to talk to. You probably want a Finbucks advisor, RIA, or wealth manager to be helping you make those decisions. Talk to an actual financial advisor and not Reddit. If I was in this position, I would pay off any high-interest debt first, excluding mortgage, unless that is high interest, assuming you have a mortgage. A balloon payment of $15, $20,000 if there's a line of credit portion of the mortgage so you can draw from later if really needed. I would lock in a high-interest CD for 1 year with 50 of the money. Dollar cost average into the stock market, split with QQQ and SPY ETF for $1,000, $1,500 per month. $20, $25,000 for emergency funds in high-interest savings checking bank account. $1,000, $2,000. Buy yourself something nice. Without complete information from OP, this is just a loose framework. Put 6 months' expenses into a high-yield account. Dollar cost average the rest into low-cost diversified ETFs like VTI and VU. Use Sartre Cafe. I'm assuming you don't have any debt and doesn't engage in active investment. If that's the case, for now, I think it's better to just buy CDs, which offers high interest rate of 6 or more. At least it's a lot less riskier than diving into stock market when it's so risky. Start with reading Becoming Your Own Banker to build your fiscal foundation for moving forward. Do better than Chase Bank, also travel. While you learn what to do, you should be earning a couple in savings, or you could ladder some CDs making 5-6. As long as you're using an FDIC bank, the savings account and or CD are risk-free.